Altcoin market cap just smashed through $1.18 trillion, USDT dominance is cratering, and a $28 billion tech giant just went all in on Hedera. If you're still sitting in stablecoins right now, you might want to pay attention, because the crypto market is rotating, and it's rotating fast. The question isn't if Altseason is coming anymore. The question is whether you're positioned before the fireworks start. What's up, everyone? Welcome back to the channel. If you're new here, I break down the crypto market so you can actually understand what's happening without the fluff. Do me a favor, smash that like button right now, subscribe if you haven't already, and turn on notifications, because the market is moving quick and you don't want to miss what's coming next. So let's talk about what's happening in the altcoin market right now, because we're seeing some serious signals that have traders buzzing. First, we've got Total 3, which is the metric that tracks the entire altcoin market cap excluding Bitcoin and Ethereum, hitting a fresh all-time high of $1.18 trillion. That's not just any number, that's the highest weekly close we've seen, even surpassing the insane bull run peak from 2021. When Total 3 is pumping, it tells us one thing: money is flowing into altcoins, and it's flowing hard. Now, why does Total 3 matter? Because traders use it as a health check for the entire altcoin ecosystem. When this metric climbs, it means capital is rotating out of Bitcoin and Ethereum and spreading across the thousands of altcoins looking for bigger gains. It's the canary in the coal mine for Altseason, and right now, that canary is singing. But wait, there's more. USDT dominance just fell off a cliff. We're talking an 11.8% drop in just 1 week, sliding from 4.74% down to 4.18%. For those who don't track this metric, let me explain why this is massive. It means people are pulling money out of stablecoins like Tether and throwing it into riskier assets. They're not sitting on the sidelines anymore, they're hunting for returns. And that usually happens when confidence is building across the market. If USDT dominance breaks below 4%, we'll hit levels we haven't seen since January 2025. That's significant because historically when stablecoin dominance tanks, altcoins go parabolic. People aren't parking cash anymore, they're deploying it, and the charts are starting to reflect that shift. Now, here's where it gets spicy. A crypto trader named Honey spotted something on the weekly chart that has the community fired up. According to Honey, we have officially broken out of the cup and handle, which is extremely bullish for our beloved altcoins. Expect fireworks in the coming weeks. Total 3 to 1.6 trillion. A cup and handle pattern is one of the most reliable continuation patterns in technical analysis. When it breaks out, it usually means the next leg up is already loading. So, what does this all mean? In my opinion, we're witnessing the early stages of what could be a legitimate alt season. The pieces are falling into place. Total 3 is at all-time highs. USDT dominance is collapsing. Traders are spotting bullish patterns. And if Honey's projection of 1.6 trillion plays out, we're looking at a 35% upside from current levels across the altcoin market. That's not small money. That's life-changing if you're positioned in the right assets. But I'm not here to tell you to ape into every random coin. What I'm saying is the market structure is shifting, and ignoring it would be a mistake. Altseason doesn't announce itself with a press release. It creeps in slowly, then explodes all at once. And right now, we're in that creeping phase. Now let's pivot to something even more interesting: Hedera's HBAR token. If you've been sleeping on HBAR, you might want to wake up because a $28 billion global tech giant just joined the party. Arrow Electronics, a massive player in the supply chain and electronics distribution space, officially joined the Hedera Governing Council. And this isn't just some PR stunt, this is real institutional adoption happening in real time. According to a post from Finance Bull on X, Arrow is integrating HBAR to optimize supply chains and connect global suppliers and customers on-chain. The post was bullish, and rightfully so. When a company worth $28 billion starts exploring blockchain infrastructure, it's a signal that traditional finance is finally making the move on-chain, and Hedera is leading that charge. The announcement came straight from Hedera's official website, so this is confirmed. Chuck Kostalnik, Arrow's senior vice president, explained that the company is exploring Hedera's technology to make supply chain operations faster and more efficient. We're talking about real-world logistics being tested on blockchain. Not some vaporware project promising the moon. Actual use cases with actual revenue flowing through the network. Now, I want to be clear here. The announcement doesn't specify direct HBAR token integration just yet, but the fact that Arrow is joining the governing council is huge. This council already includes giants like Google, IBM, and LG. Arrow is now in that club, and their interest in using Hedera's tech for supply chain management tells us they see value in the infrastructure. In my view, this is the kind of adoption that separates projects that survive from projects that thrive. Hedera isn't chasing hype. They're building real partnerships with real companies, solving real problems. And that's exactly what you want to see in a long-term hold. Let's talk technicals, because the chart is setting up beautifully. HBAR is currently trading around 23 cents, and according to trader Steph is Crypto, we're seeing what's called HBAR compression. This is when price volatility shrinks, the range tightens, and the market is basically coiling up for a big move. It's like a spring getting compressed before it snaps. On the daily chart, HBAR has been trending in a downtrend channel since July, forming what looks like a textbook bull flag pattern. If you're not familiar, a bull flag is a continuation pattern that usually resolves to the upside after a period of consolidation. And right now, HBAR is sitting right in the middle of that consolidation zone. The Bollinger Bands are compressing between roughly 24.5 cents and 20 cents, which is the classic sign that a breakout is coming. Here's the setup. If HBAR breaks above 24 cents to about 24.5 cents, we could see a move to 27 cents and potentially 31 cents. That's a 25 to 34% gain from current levels. On the flip side, if it drops below 21 cents, the setup is invalidated, and we'd need to reassess. What makes this interesting is the timing. You've got fundamental news with Arrow joining the council, and you've got technical signals showing compression. The market is waiting for a catalyst, and this Arrow partnership could be exactly what sparks the move. Sometimes in crypto, the best setups are when fundamentals and technicals align at the same time. And that's what we're seeing with HBAR right now. I'm not saying HBAR is going to 10x tomorrow. What I'm saying is the risk reward here is favorable. You've got enterprise adoption building in the background, a tight technical setup on the charts, and a broader altcoin market that's starting to heat up. If you're looking for asymmetric bets, HBAR is worth having on your radar. Altseason doesn't happen overnight. It builds slowly, then accelerates fast. And the early movers? The people who position before the crowd catches on are the ones who make the real gains. Right now, we're in that early phase where most people are still skeptical, but the data is telling a different story. All right, that's all I've got for you today. To recap, altcoin market cap just hit $1.18 trillion, USDT dominance is crashing, and HBAR is coiling up with a massive partnership in the background. If you found this video helpful, make sure you hit that like button and drop a comment below with your thoughts on HBAR or Altseason. Are you positioned? Are you still waiting? Let me know. And as always, subscribe and turn on notifications so you never miss an update. I'll see you in the next one. Quick reminder, this is not financial advice. Crypto is risky, volatile, and you can lose everything if you're not careful. Only invest what you can afford to lose, do your own research, and never rely solely on YouTube videos to make financial decisions. Stay safe out there.